Let anybody tell you you need 20% down to buy a house or tell you that you have to pay off a credit card to get pre-approved for a mortgage. On today's episode, we are myth busting 5 most common myths for pre-approvals. Let's go. Guys, welcome back to the channel. It's Dave, Greathouse, Realtor with Real Broker, licensed in both Illinois and Ohio. And as I mentioned, we are discussing pre-approvals and the myths and sort of misconceptions, if you will, about mortgages. And who better to talk about that with than the one and only, the man who needs no introduction, but I will still give him one. Okay. Devontae Brooks with Rate Mortgage, and Devontae has been in this industry for over 16 years, helped hundreds, I should say thousands of families get houses, man. That's outstanding. I think over a couple $100 million in transactions. He's won numerous awards. I mean, he's awesome. He's also the leader of the Better Call Brooks team. I think one of the better names I've heard, especially if you're a fan of that particular show, which I was. And I will say this about Devontae as well before I bring him in, is he is a beast in the weight room. I've seen some videos recently on Instagram.
I try to hold it down for our older, like 39-year-olds and our dads out there. So, we're just trying to transform the dad bod. That's what it gets down to.
Well, you make me feel terrible about my little 20-minute bike ride I take every day when I see the workouts you're posting.
You're moving. So it's all good to go.
All we can do. That's all we can do. So yeah, thanks for jumping on. As I we talk about offline, I think there's a lot of people out there, not necessarily just first-time home buyers, but a lot of people that just have a lot of questions and misconceptions about getting a pre-approval, getting a mortgage. I was one of them when I bought my first house. I had no clue, right? People were like, oh, yeah, you have all this stuff ready. I'm like, I don't even know what you're talking about. So
absolutely,
I thought we could jump on, especially I think, we're filming this right at the end of 2025. There's apparently this big buyer wave coming in 26 that I keep hearing about. So I think it's good information for people to be prepared, to be educated and understand it's not scary.
No, it's not.
Right? It's not scary.
It's a part of life, right? And I think it's one of those things that people have, when you are going through the buying process, whether it's your first home or your fifth property, there's always conversation. There's always some noise about what's going on. Is it a good time to buy? And the thing where that comes from people, from their sphere, is that people just want to make sure you're making the right decision. So they're trying to give advice based on maybe their information they have and the experience, but sometimes they can make it a little bit confusing if they're not in the real estate or the lending industry. So that's why it's always super important to talk to a great professional that has experience, right? Not saying everybody, this in our industry, not everybody's built the same or has the same knowledge, right? So make sure that you vet out the people that you're going to talk to get the information of what they think, right? But when it drills down to it, when people are thinking, hey, is it a good time to buy? Well, really want to focus on, is it the right time to buy for you, right? Maybe it's not, maybe it is, but when you're working with great professionals, we'll let you know what it looks like for you so you can plan if it's in 2 months or in 2 years. I think that's the most important piece. But people just want to know information. They want to be educated. And sometimes there's so much noise in the system. We really just have to kind of just barricade that stuff out and just get down to the details and talking to somebody that really knows what they're talking about.
I agree. So let's jump right into some of these myths. All right. Because these are things that I hear all the time. I'm assuming you hear them probably more than me.
Yes.
But, all the time. And I can speak to a lot of these from a personal experience, because a lot of times I think about how I was when I bought my first house. So I'll probably tell some stories along the way. But the very first one, I just had this conversation last week with somebody, and I understand it because it was the same thing for me, is the misconception that you need to have 20% down to buy a house.
This is the huge one. Yeah, this is probably one of the top 2 or 3 questions that people have, especially first time home buyers. Like, oh, I need 20% to put down on a property, and that can be anywhere farther than the truth. Okay, so a lot of this comes from people confusing it with putting down 20%, you don't have to pay PMI, right? That's all that is. And PMI is private mortgage insurance. But this also comes from sometimes people's parents where they put down 20% back in the day, like, oh, you have to put 20% down to buy a property. If that was the case, there wouldn't be a lot of people buying properties because not everybody has 20% to put down to purchase a home. So it was a little bit of a misconception out there. And per the National Association of Realtors, get this, the average first-time home buyer, the down payment is somewhere between 6 and 9%. But as a first-time home buyer, you can put down as little as 3% to buy a property. So it really just depends on the type of financing you're getting. For conventional, the minimum down payment is 3%. For FHA, it's 3.5%. And the best thing for veterans, it's a 0% down payment. And there also are multiple down payment assistance options out there too for people that may qualify. So really what it just comes down to at the end of the day is just figuring out what that approval looks like for you. Not so much, hey, I need 20% down. But then sometimes, I'm sure you've been in this conversation, had this conversation with people, Dave, where they're like, oh, no, I want to put 20% down. I want to keep on saving because I want my payment to go down a little bit more, something of that nature. The other thing that people forget about that with saving more money and time, real estate tends to go up over time, right? So even maybe you have a little bit more to put down. If you pay more for that real estate, really maybe you're not saving money. So I always kind of just talk to people like, people always want to time the market, right? They want to maximize their dollar. Like they want to buy low, they want to sell high. Yeah. Sometimes people just overcomplicate it. Really, it's about time in the market, meaning that you want to own that asset, whether it's real estate, whether it's in the stock market, and you see that go up over time. But if you look at the charts, things go up over time, not down. So waiting a little bit longer to put down another $5,000, that's really not going to change your monthly payment that much too. So a little known fact people don't know is that for every $1,000 increase or decrease in your down payment, it typically changes your payment by $4 to $7 a month, right? So with that being said, you're jumping over 20s to get to 5. So every situation is different, but end all be all, you don't need 20% to put down. Not a lot of people have that, to be honest with you, especially first-time home buyers this day and age, but you have flexibility, right? So if you want to, it's great, but it's not a necessity.
Yeah, that's a great answer. And those are things I didn't know either about the average. Yeah. And how much it impacts your payment. Like sometimes we'll get into discussions with buyers about, oh, maybe you go $5,000 more on your offer, and they're like, oh, I don't want to do that, but really it doesn't impact your payment that much. So
even the cash to close too, it's a big, and this is something that I talk to with buyers all the time too, is because in our mind, those numbers seem very grand. They are big numbers, like $5,000 out of my pocket today, $10,000 out of my pocket today. Yeah. It's a lot of money. But what people forget about is that when you get a mortgage, the maximum loan term for a mortgage, it's 30 years. It's stretched over 360 payments. So when you stretch that $5,000 or $10,000 out over that period of time, it's an incremental difference in that monthly payment and what it comes down to. So with that being said, it's just the conception of everything, because with the news, if it bleeds, it leads, and people kind of just don't know the facts, and it can be a little bit confusing out there. But again, that's why it's so important just chatting with professionals that understand these things to make sure it makes sense for people.
You got it. All right. So that leads me to my next one, that I, or a buyer, I need to pay off all of my debt before I buy a house.
No,
I get
that
it.
is not true.
It makes sense, right?
Right. And people overcomplicate this sometimes too, right? You don't have to pay off all your debt before you buy a property. So I have conversations, and it sounds like you have too, but people are like, oh no, before I start buying a property, I want to pay down a credit card, or I want to pay off my auto loan, thinking that it's going to help them out, but really they don't know. You're shooting in the dark essentially. So whenever I have a conversation with people, I'm just like, hey, don't pay off anything right now, because maybe that money that you're using to pay off things, you could use toward, your closing costs and your down payment. And then they're also thinking in their mind like, oh, me paying down things is going to have my credit score go up. But here's a little known thing that people, when I have a conversation with people about this, like, hey, when we check your credit, we do a soft credit check, and then you thinking that you have this plan to get your credit score maybe up from like 720 to 740 by paying off X, Y, and Z, you really don't know. You don't have the tools that I have. So cool thing on my end of it, when I check that person's credit, I have a credit simulator, so I can say, hey, if you pay off this Capital One credit card or this Chase credit card, your credit score will go from this to that. And this is how it's going to impact you. But sometimes people blindly try to help themselves out, and it's coming from a good place. They try to pay things off, but they really don't know how it's going to impact them. So you always want to get that professional advice. So whenever I talk to people, like, don't pay off anything until I actually look and see if it makes sense for you or not, because sometimes people do things thinking that they're helping, but they're really harming their situation, and you just don't want to do that.
Yeah, that's good advice. You know what I hear? I've heard this now. We talked about it twice. I
Yeah.
think sometimes people are listening to the wrong people,
Oh, yeah.
right?
I
I
agree.
listened to my dad, right? When I bought a house, he's like, "Hey, you got to put 20% down. You need to do this and this and this." And it's, things change.
It
So
does.
that's good advice.
And
All
it's
right,
coming from a good place, like we said before.
it
It's coming
is
from a good place, but
100%.
people sometimes they just don't know if it's not their profession. Like I'm not going to go like I know how to change my oil, right? But I
Yeah,
don't change my oil any longer, right? So I leave it to the professionals. They can get it done in 5 to 10 minutes, good to go. Whether me spending 30 minutes to an hour for it, but people are giving that advice just from their anecdotal experience sometimes, and they're trying to get the best advice. But if it's not that profession, they can make it a little bit
yeah,
more confusing. So just to circle back to as far as paying off debt, you never want to pay off debt without a plan. All right. So the goal is not to have zero debt all the time when you're buying a property. Is this a structure to pay off things correctly and how it's going to affect you and impact you buying a property? And again, it's all about that plan for us. So just don't
sure.
blindly start doing things. Get that advice from people, from
Um,
professionals.
all right. So you mentioned credit scores or
Mm-hmm.
credit. Um, I have a credit story. So when I was 22, I tried to buy a couch and I couldn't get a couch.
Oh yeah.
Right? They're like, you don't have any credit. I'm like, what are you talking about? I don't have any debt. They're like, you don't have credit, right? So ever since then, I have been like super crazy about maintaining a solid credit score. I don't
Absolutely.
understand how it works. I mean, I pay everything off and my credit score goes down. I'm like, I don't know what's going on. So it can
You're
be
right.
confusing to people. But one of the most common questions I get is that if I say I do a mortgage application with you
Mm-hmm.
and I want to maybe compare it to three other mortgage lenders, right? Which I think is smart, but
Right.
they think that hurts their credit. Can you
Mm-hmm.
explain how like that works from a mortgage standpoint, where you do a soft pull or whatever it is you guys do?
Absolutely. So yeah, this is one of the big misconceptions out there as well, because obviously you work hard for your credit, right? The higher your credit score is, the better terms that you're going to get with financing. And what's so frustrating for a lot of consumers is that you get credit scores everywhere. If you log into your banking app, if you go on the like Credit Karma, Credit Sesame, you get all these numbers. And what
Yeah.
frustrates people is different numbers everywhere. So I don't know which one's accurate or what's going on with it. And people have to recall too, your credit reports, it's a living, breathing thing. Okay. So what I mean by that, it's always updating, right? Payments are reporting, you're paying off debt, things are changing all the time, which can be frustrating for a lot of consumers because they'll check it one day, then the next day they see it goes down. So
Yeah.
the biggest misconception out there of what happens when I actually have my credit pulled for a mortgage, the short answer to that, nothing if it's done correctly. All right. So where this gets really confusing at for consumers is that people think that all credit inquiries are the same. They are not. Okay. So when you apply for a mortgage, it has a special identifier based on government regulations. Okay. The government stepped in years ago and said, hey, you can't penalize somebody if they're looking to see if they qualify for a mortgage or who's
Mhm.
going to be the best fit for them, right? That's counterintuitive when you think about it. It's a secured asset. They're trying to
Yeah.
purchase something, so it won't have a negative impact on your credit score, all right? Now, where this gets confusing at are the type of inquiries you have. So let's say that you apply for like 6 credit cards in a 30-day period. Well, that's unsecured debt, all right? That's not tied to anything at all. So most likely your credit score is going to drop because it looks like you need credit. In the credit industry, that's not a good look. When you're too
Good.
needy for anything, right? It's never a good
Yeah,
look,
makes
right?
sense.
If you're dating somebody and you're calling them relentlessly all the time, that's not a good look. So
Never good.
everything in moderation, right? So with that being said, it's just what type of credit pools actually the result of that. Okay. So long story short, checking your credit when you're buying a property for a mortgage, it does not have a negative impact on your credit score. But the other part that gets really confusing for people is that when they see those free banking apps or whatever it is, they see the credit score is different that the lender has. So let's say that somebody has a banking app and the credit score shows 755 on there. And then when we check it as a lender, their credit score comes back at 730. Automatically, people think that, oh, my credit was
Yeah.
pulled, so it dropped. It's not, all right? So it's a different algorithm, right? So when you see it on your side as a consumer, they typically use something called a Vantage scoring model, which is newer and more trendy, not something that we use entirely right now in the mortgage industry. We use a FICO scoring model. But the other thing people have to remember, when we pull credit, we pay for that. So it's your accurate credit score. So with that being said, people
Okay.
think like, oh, no, you guys pulled it, so it dropped. It's against the law, right? It's federal
Yeah.
regulation that it cannot impact you. So that's where it gets really confusing for a lot of people. So no, it's just all about the types of inquiries that you have. So again, unsecured debt, That's bad. Shopping for a mortgage or getting pre-approved, that's not going to have a negative impact, but it may not match your free credit scores that you get on your end.
That's excellent, man. Thank you for clearing that up. I see those all the time when I log into my
Right.
credit card app. So I'm like, dang, my score went up. Maybe it did. Maybe
Yeah.
it didn't. I don't know. Okay, good. That was fantastic. So
Yeah.
here's one that's near and dear to my heart. And because I'll tell you, I get calls from potential buyers all the time. Hey, I saw this house on Zillow. I'm ready to go look at it. Can you show it to me? And my answer is, of course, I'll show it to you. But let's have a discussion about where you're at in the process while we're at that showing. And one of those topics is always about, are you financing this house? Are you paying cash? Like, what's your game plan? If they say financing, great. Do you have a lender? No. And this is what they tell me. No, I'll talk to a lender after I find the house that I like.
Yep.
And I'm like, boy, that's maybe the wrong way of doing it. But talk a little bit about that and why it's, I guess the myth is you should find a lender after you find a house. No, it's the other way around, right?
Yeah. The short answer to that, preparation leads to victory. You are buying one of the most expensive assets that you're probably going to have in your lifetime. So rolling out of bed and say, hey, I'm good to go. Once I find a property, I'm just going to get pre-approved at that time. And that comes from people feeling very secure in their financial aspects as far as their life. They feel comfortable, like I'll be fine, I'll qualify for anything. But sometimes you don't know what you don't know, right? And so there's never early enough time for people to get pre-approved, right? I have clients that are starting to shop next year and they were pre-approved a year ago because they wanted to make sure they're in the right price point. They know what the monthly payment's going to be. So they're prepared properly for this market. The other part of this too, Dave, and you can probably shadow me with this, you want to know that they can afford it. But then number one, you want to make sure they understand what that looks like with the numbers. Okay. A lot of times people think that the numbers may be a little bit lower than what they really are. And you want to be prepared for that. Are you looking in the right price point for the homes that you may, come across, right? So I think it's always important. So getting pre-approved, you can't do it enough. In my opinion, I think it's always important to have that conversation because we never want people to get maybe cold feet or sticker shock with everything, right? You want to make sure when you're making an offer, you're making that offer in confidence. How you make an offer in confidence is understanding that numbers with your monthly payment and then also your cash to close, right? So with that being said, pre-approval, do it as early as possible. And again, now the majority of lenders do soft credit checks, so you have everything to gain and pretty much nothing to lose to be prepared for that. And then also, how competitive it is out there in the market right now, right? We still have an imbalance. We have a lot of demand, still low inventory. So the worst thing that can happen is that you find that property, right, Dave? And then the person's like, oh, this is the one I want to write an offer right now. And then you're trying to scramble to get them pre-approved. And then they maybe not understand the numbers. Maybe you lose out on that time frame. It's just a big scramble. And it can be very stressful, more stressful than what it needs to be, right? So with that being said, being prepared to pull that trigger and having that education is so important, especially just walking to a property, like, oh, this is the one, let's write an offer, but not even know if you can afford it, right? So you want to protect your time and you also want to protect the client's time too, so you're not showing them properties that may not fit the bill for them. So end all be all, you want to be prepared for it so you understand your numbers, but then also that you're making a competitive offer, because if there's 5 or 10 offers coming in and then you have to wait for you to get pre-approved, sometimes lenders can't do it same day. Maybe it's 2 or 3 days on the road. You may miss out on that opportunity.
Yeah. Imagine how powerful that is as a buyer. And let's say you're working with me or another agent and we have, 3 houses lined up on a Saturday to go see, but going into each house what the payment's going to be. Right. Okay. This house is going to be $2,300. This house is going to be $2,600. This house is going to be $2,800.
For sure.
That changes the mentality of how you approach that showing.
Absolutely.
Right? And sometimes people don't even, this is a whole nother topic, but like how taxes play into that. Like if you're looking at different areas. So it's great advice. Talk to them before. That way you have like so much more knowledge to make your offer.
Yeah. And even going back to what we kind of discussed too with that too, just to kind of wrap that up, if it is a competitive situation, like going into that to say, hey, if you get this property for list price, hey, if it's competitive, if you go 5 or 10 grand over, here's what it's going to do for you. Like having that knowledge, it brings down that stress level so much for the client, and they just feel really empowered and feel confident about the process instead of hoping and wishing the numbers all work out. They know going into that. So I think it's super important, especially on the other end of it too. Like, hey, do we need to ask the seller to pay for some closing costs or things of that nature? Like you want to make sure that offer is structured the right way, because you tell me this, like if you're the listing agent, I think some things can be super frustrating when clients are maybe not pre-approved, and then they get pre-approved, they make an offer on a property, they get it accepted, and then again they get those numbers, and then they see that cash to close or how much money they need for closing. It's a lot higher maybe than what they have. Then they're like, oh, I need to ask the seller to pay for some closing costs. If you circle back and ask the seller to pay for closing costs after you haven't accepted an offer, sometimes that's a deal breaker. They're going to cancel it and walk away, right? So again, preparation is the key to victory with that. And again, you have everything to gain, really not much to lose. You have to get some documentation, X, Y, and Z, but you just want to make sure you're ready to go when you're looking at property so you're not missing out on opportunities.
Yeah, great advice. All right, last but not least, I guess, is the difference between being pre-approved and actually being approved for a loan. So I'll give you another quick story. I was working with the buyer. We were under contract on a house, and the margins were kind of tight on his loan, and you know how that goes. We show up for the final walkthrough 3 days before he's going to close. He's got a brand new Range Rover. Oof. And I said,
I've had a story like this too.
Yeah, like that's a pretty sweet ride, man. He's like, yeah, I just picked it up. I'm like, by any chance, did you take out a car loan? He's like, yeah, why? I'm like, oh boy, we're in trouble. So I guess the myth here would be that pre-approval does not mean a guaranteed loan approval.
Yeah, doesn't mean it's a slam dunk, right? And that's a great point. I've been through that situation before, and we always try to educate clients like, don't spend any money at all or take out any debt when you're buying a property. So what happens on the lending side of it is that we, per lending regulations, we get updates if people are applying for things or if they're buying things, because you have to make sure it meets federal lending limits for debt to income ratio, right? So just because you're pre-approved does not mean it's a slam dunk that you're going to be able to close in the property. There still is a secondary process going through underwriting where they go through your bank statements. In addition, they comb through that, your income, to make sure everything's good to go. But if you do add debt during the process, we have to qualify you with that during the process. So if you add a $700 car loan and your margins are thin, that may blow you up from buying a property. And the worst thing about that, a lot of times you can't return a car, right? Once you get that thing off the lot, it's depreciated. You can't return it because you're buying a property. And so now you have this great Range Rover or whatever car you're going to live in or buy, but do you want to actually sleep in your car, or do you want to sleep in a house? So this is what it comes down to at the end of the day, right? So you can have a beautiful car, but I hope you get really comfortable in it. So delaying that gratification maybe for a couple of days, and I know things do pop up, but the really key part of that is make sure you ask your realtor or the lender, like, hey, I'm thinking about doing this. Is this okay? Will this impact me buying a property? We will make sure you're in the best path going forward so things aren't blowing up again, because that's an emotional roller coaster that we all want to stay off. We don't want to be a day before closing or day of closing like, oh, now I can't close in the property because I did X, Y, and Z. It's a bad place to be in for all parties. And even think about that on the selling side of it. Maybe they're supposed to close on a property. They need the funds from selling that home to close on another property. Now you're blowing up somebody else's life and their dreams, right? So just ask the question. I think sometimes clients think they can sometimes work on things behind the scenes, and then lenders won't know, or realtors won't know. This industry, as far as real estate and lending, is very buttoned up. There's checks and balances in place. Just ask the question. We're on your side to help out. There's not a question too big or too small, right? But just make sure you don't have that grenade blow up in your face, right? We don't want that.
Yeah. This was fun, man.
Yeah, absolutely. It's a great time. Always a good time talking about real estate and mortgages.
I know, man. And hopefully people out there will enjoy it too. And I'm going to ask people to comment down below, like what's their number one question about getting approved, or maybe what's a myth that they've heard, because I mean, I've heard a lot of them. I'm sure you have, but I bet you there's others that we haven't even covered that we could probably spend 3 hours on this topic.
Absolutely. We can have a great topic about that too. And what I would love to listen to from people too, if they can comment below, like what would be holding you back from buying real estate in 2026? What are you concerned about? I think that's something that we always want to think about in our world too, because I think 2026 is going to be a very busy year in real estate, just based on all the data and everything that we're going to see, where rates are trending to, and people that may want to sell and everything else. So what does that look like for you in 2026? What may hold you back, or what will inspire you to buy a property? I'm always curious to see those things.
Cool, man. I appreciate it. I think we're going to do more of these, so be on the lookout for more with Devontae. I'm going to put your contact information in the description box too. So anybody that's got questions for mortgages, refinances, killer workout routines in the morning. I mean, you better
We
call
cover
Brooks.
all the bases. Yeah, you better
Right.
call Brooks. Instagram handles, better call Brooks. I'm easy to find.
Yep.
Dave and I are here just to be your resource. We know buying a property, selling a property can be a scary proposition, but that stress goes down significantly working with the right team. So we're here to answer questions. We just want to educate people because we want to make sure that you're in a good place when you want to make that leap of buying or selling a property.
You got it, man. Appreciate it. And again, my info will be down below too. Make sure you reach out to me when you're ready to buy or sell that great house.
Yeah.
Devontae, it's been a pleasure. We'll talk to you next time.
Absolutely. See you later.
See you, man.